Welcome to Trading Lounge and the commodities report, and we'll start with the yields here just quickly. We've got wave 3 here with wave 4 here, 1 and 2 and 1, 2, 3, and I think it's an A and a B and a C at this point here based off the 30-year yield, but if I'm wrong then we'll have 1, 2, 3, 4, 5 at the top of the third, then the fourth and then the fifth. So either way we're going up a little bit higher. I do want to look at the 10-year yields for our Australian folks. So once again we've got wave 3 and 4 here, then 1 and 2, 1 and 2, 1, 2, 3, 4, 5 for the third, fourth, and 1, 2, 3, 4, 5 up for the third, the fourth, the fifth. So pretty much in line with the US 10-year yields as well there. So over to the US dollar. So we've been confirming that the US dollar is obviously weak, so we're on the right track here, and we're looking down at wave 1 and 2 and 1 and 2 and 1 and 2. Now this could be viewed a little bit differently. We could also put wave 2 over here for that, but it does count better as a 3-wave move up there, but I can squeeze 5 waves out of it. So what I normally do in these cases is once this trend actually begins here, well, it's begun already, but as it stretches out, it will become clear that we'll need to use this as 1 and 2, or this will become such and such here, or the like, you know. So I mean, even if I move this wave 2 over to here, right, if I move that wave 2 over to there, then we could move wave 1 to here and look at this as an ABC for wave 2 here. So there's a few variations. It doesn't really matter a big deal. I'm just going to go into the 2000 tick chart from the daily to the intraday here on the 2000. And with this here, let me just get some more data in here. So there's different ways. Just be aware that there's different ways to view these two tops there, and different Elliott people will have, you know, different counts. This would be typical of putting, you know, 2 people in Elliott people in a room and coming out with 10 answers, so to speak. But the main point that I've been trying to work with here is that we're seeing 5 waves to the downside and 3 waves to the upside all the time. So that was keeping me on the bearish side. We were trying to use the dollar yen as an example of term, but it kind of was still pushing quite high. It's falling out of bed at the moment. So we started to use the CAD because the loonie rather, because it was it just basically broken down out of its bullish pattern. So that was really the first time we could see that, and we'll just check on that in a moment. But yeah, so anyway, it's you know, this week we confirmed that we were going lower, so we've been working through this ABC correction, and now we're working down here. So we're going to get some sort of, it's a little bit dodgy in here for this, but basically this move down here will see some sort of little ABC rally back here and then move down. We don't normally trade this as such, but we normally look at the euro dollar and the sterling and the Aussie and those sort of things. But either way, we're in this wave 1 and 2 for sure, and then wave 1 and 2 here. Now we're also in group 1 here as well. So group 1 from 100 here, CFD product. So 1, 2 and 3 here. So we're locked in here now, and normally this will come back and check number 2 here at some point, and that will be, once that fails at that point, then it will be pulled to this number. It's going to be pulled to this number, then we're going to see it under here. So we're basically looking here as 1, 2, 3, 4, 5, so on down here. Just take that with a pinch of salt, but basically that's kind of what we're looking at, which gives a good upside to other markets. But we're going to look at the CAD here for a moment, because all of this pattern looked quite bullish here. But like with the dollar yen and the dollar itself, we had this 5-wave move coming down here. That was the sort of bearish side of things. So technically we should see this come down and take out these lows here. You know, it's high up here like the dollar yen, but it should, you know, continue down. We talked about shorting it under this particular low here. We could short it above there, but I didn't want to get into all of that. But the fact that it's sort of broken this low here that's the thing that really triggered it. So this was the first one that I could see that was triggering the bearish bias for the US dollar. Then we've got the dollar yen here with the same 5 waves down here. Well, we've had this as an A and a B and a C, and it came really quite high here. And we tracked it up and we did pull in the top, so that's all good. And we're looking for a bounce probably off this 140 here. I haven't really pulled it apart, but as I mentioned to folks, you know, you can be on the short side, but it's really I don't know, it could just keep cascading down really. Actually, it's 1 2 3 1 2 3, yeah, so we could end up down. I mean, it's going to hit in here, so just be a little bit mindful of how you play this out here, but we should see some sort of corrective rally at this very shortly anyway. So it's probably actually going to be down here. If I look at this is 1 2 3 here, and then this is 1 and 2 and 1 and 2 in here. So that means we're going to kind of get some sort of, going to get something like this. It's not going to be pretty. And then down, it's going to be something like that, okay? And the sterling here, so we're on track here with wave 3 4 1 2 3 4. We've been looking at move up there. We talked about being long above the 72 there. So if you're long there, the target area is the 1.3 over here. This is also a bit of a third wave, so we're going to end up coming above the level, and then we'll look for the next long trade over here. So taking money off at the 1.3. And at least, you know, 80% of it and the rest of it, or 70-80% and the rest of it up there, but maybe all of it at that point, because we will be spending some time here, and this is where we'll look for the next setup. But we need to prove that, because I've got wave 3 4 and 5 on 5 here, so we may end up in a bigger correction for the sterling, but we may also be able to look at this as 1 and 2. But I need to figure it out. I'll need to get the trade set up over here, because we buy in the pullback. We buy, this is why we bought here for this, you know, after a correction, we try to move in after the first impulse wave. So we get the first impulse wave, a correction, and then we get the next little impulse wave and we start building in. And that way we can manage the risk really nice and tightly as well. So the euro dollar here, we're looking at wave 1 here with a B and C here, not a very good things. I'll have to probably move that around a little bit. It's not a big deal, not a big issue. We can just go that way with it. Yeah, so the next setup here as well. So we're not going to, the 1.1 is the strongest number, and 1.1 here is, you can see that it's basically holding it here. So whatever pushes up here, it's going to be pushing back in due course, and this is where we'll look for the next setup. We'll not go long once we arrive at a number. It just doesn't make any sort of sense. So anyway, everything's going according to plan. We'll capture it over here, but this trend to the upside here, it could be counted 1 2, then 1 2 3 4 5 for all of the third wave, fourth and fifth here. So 1 2 3 4 5, but I'll just see how it goes. I'll just see if we get an ABC pattern here first, because don't forget the dollar's got to bounce back. You know, when that dollar bounces back, then these will pull back down in that case. So for the Australian dollar here, we're going for the long haul, so we're going pretty much up to sort of 80 cents up here somewhere, right? So we're not going to trade, this is a CFD platform. We don't want to trade CFDs because it's virtually compound interest, compounded daily at a higher price each time. So we've been using the FXA, which is a non-leveraged product on the New York desk. And yeah, so we've got a position here, we've got a position here, we've got another position here, and we're going to be looking to add above here. We're also going to be looking to add above here as well. We need to build into there, okay? I mean, for the short term, if you wanted, you know, using futures contracts out of the US is good. Australia don't have their own futures contract on the dollar anymore, which is absolutely crazy. But there you go. It's a crazy world. That's the currencies. And then we move over to gold here. So I want to have a look at gold's basic, because the dollar's, the dollar and gold have been pivoting off each other, so to the day, so it's been very accurate, so we can continue to use that. So we can buy gold now, and we'll be looking at that today because we can confirm the US dollar has moved down. So I want to have a look at the bigger picture here. I want to have a look at a few alternative accounts, because when you're going in a particular direction, you should spend more time focused on the other direction. So you've got a very clear, you haven't got your head in the clouds, as nice as that is. So here it's possible to count that little move down from the top down here in 5 waves. So it's possible, I'm not saying it's true, but it's possible to put that wave 5 here and have that wave 5 top there. You know, we're above this wave 3 top and all the rest of it. So it's possible, right? So that's one thing. And we've got this monthly stochastics here that I wouldn't worry about too much about that, because when markets, the way the indicators work is that, you know, all these sorts of things, when they're at the previous highs, they will end up just flatlining here. So then you need to go to the bigger time frame. So it is, number one, it is possible to have a top in there. So you'll have opinions, make sure they don't get you into trouble. It's possible to count this down here as 5 waves. It's but because based off the dollar, we can squeeze 3 waves out of it, and we can just push up here into a wave 3 here. So there's a good chance for that, and that's what we're playing for. But at the same time, we need to be mindful and don't overdo it, but you know, just build in a steady way. So that's on the monthly chart. If we go to the weekly chart, just to rearrange this little pullback in here, then it'll look a little bit healthier here on this note. So you can see that it's pulled back here, giving a buying opportunity on these lows. So the two things here are that I could look at this as the A wave here, the B wave here, and the C wave here. That's the bad news. It's not what the currencies are telling me though, but it's something that I'm mindful of. So when we're moving up here, we'll be building positions up here. We'll be mindful that this could be an A and a B and a C, because it can count as 5 waves moving back. So if I go from here to my alternative count at 10K here on the intraday, I think I might have it here. Let's just, what have we got? 2, maybe 1,000's good, maybe 2. So it's possible to count this down. It's a little bit dodgy top here, but 1 and 2, then 1, 2, 3, 4, 5 for the 3rd wave. The 4th wave really should be going here, and then 1, 2, 3, 4, 5. So there's a reasonable, you know, there's a reasonable count at that point. So we can't just, you know, what are those? Throw the baby out with the bathwater, so to speak. I mean, I love kids. I don't have any, thank God. But yeah, so there we go. So it's possible. So we're just going to keep an eye on that. Okay. So look, that's the bad news out the way. Okay. So we could have a top in here. We could have 5 waves down here. So if we do have a top in, this would be wave 1 here, not an A wave. So there is that bearish bias to it. That's the other side of the coin, okay? So we've been working on the 20K here for this. So we're going to go in and have a bit of a look at this. So we're looking at this as wave 1 up here with an A and a B and a C wave here. So one of the things that we've been working with for quite some time is, well, first of all, we can't, you know, we had a bit of trouble with this in here, but eventually we could kind of see where we are. We called the low in here. We looked at this move up here. It looked like 5 waves, but it also could be counted as 3 waves. So it was a bit here nor there. And then what we wanted to do was, because it was a bit messy here, it was possible that this move back up here could be a wave 4 in here as an A and a B and a C wave here. So we weren't prepared to go long based on that. And we also wanted to confirm the dollar, and we started to confirm the dollar yesterday. So yeah, that was, well, actually confirm it over the last 2 days. So like I said, we could go long in gold 2 days ago. But I just wanted to be a little bit sure, so we're going to use a pattern like this here. So now we've got the first high above the level here. you could probably drop that down on the second high when it comes into play. But now we can go long from that point here because we're also getting support on this level here. Now it may, it may do something like this. If it does that, then you can bring this down to this level here and go at that point, and then we can remove that. Then we can look at this as 1 and 2 and 1 and 2 here, which is a bit like how we're looking at GDX. So have a little GDX here. So we called the low in here for GDX earlier because it was just a little bit easier, but it did pull quite deep down here. But we have seen gold do that before. It's not the first time. So there's a few times that it's done that. Just go back in history, and we can look at this as wave 1, 2. So the thing here was that if this was actually 5 waves down here, it actually counts quite nicely as an ABC. It's just got long leg on the C wave here, but this counts nicely as little 5 waves up here. So we could look at, the point here is that we could look at this as 1 and 2 here. That's what I'm trying to say, with an A and a B and a C to this point here. But any move above that top there now, and then it removes that ABC probability, and we can put this back over to here like this, and then well, this would actually become wave 1 up here at that point, and would have wave 2 here for this. And we can put this smaller wave 1s in here for this, 1 and 2 in here, and so on, which I won't do fully. So yeah, so this has got 1, 2, 3, 4, 5, and we went from 100 ticks to 10 ticks in here. So we're going to go in there again and have a bit of a look at that. We looked at this yesterday. So this is the move up here of 1, 2, 3, 4, 5 for say the A wave, the B wave, and the C wave. So this is the top here. So we can go longer, but that's the safe trade. Okay. In the meantime, it might go something like this. It might go straight up from that point. It looks a little bit bearish there. So if that's the case and you get a second high there, then you can bring that down to go long at that point. Okay. Because it can just go down from here. That's the thing, because you're in 3 waves. Very clear 5 waves here. Very clear 5 waves here. So yeah. So this is where we need to start from. That's the safe trade. So that's it, really. So we'll just leave that there. We don't need to rinse and repeat any of that. And silver was a little bit more advanced in the move to the upside. So we were looking yesterday as a little, we had already had this as an A, B, and C here for wave 4, but any move above this top here, because we had a nice 5 waves here, any move above that. So we can remove that wave 4 now. We can put it up here and start to look at this move up here now. So because that's breached there now. So yesterday we talked about this being 1, 2, 3, 4 here, and we thought, well, the 4 is pulled back a bit too deeply, but we'll run with that and we'll look for an ABC pattern. We'll look for a move up and then an ABC pattern. So all that's 1, 2, 3, that's all good. So I don't know if that's been triggered in here, but it kind of doesn't matter now anyway. You can take this over here and buy it here now because of where it is, how it's played out. So that's what we're going to do. And we can also build in, this is group 1 here of 2. So 100, sorry, this is silver here. So this is a CFD product. So $20, $21, 22 and 23. Now this is extremely important, this number 3 here, because it's the top of group 1. So we basically at the beginning of the trend here now. We're in a safe position. We know where we are. We can even see the little stochastics here pulling back here nicely for this to pop up here. So really we want to build in here. So if you can get 4 positions in here somewhere before this number here, then we're good to go at that point. So this, you could look at it, you could kind of go, okay, well, there's 3, 4, and 5. We don't want to be buying anywhere too much above 24, 30. We don't want to be anywhere above that, because when we get to this number here, the market's going to swing here, and we just want to let it swing. And when it's finished its little dance, and then we can pick up the thread and move in, and it'll save us some time and so on. So so maybe what we could do is just look at you've got one here. If you get one at 50, one at 4, so we want to get one at 30 here. So at number 3 and 30 here, so the top of 30, so in this between 20 and 30, so on that high here. So we want to build in on here, and then we want to build in on, copy that onto here, and then we want to build in, you could go in there again, but we'll go up to there and build in at that point. So we've got something in at that point. We're going to leave the stop here at the moment. We must have had a smaller position in here, I think, because I got that thin green line there. But anyway, it doesn't matter if you've got one in there, half your luck. But I'm going to thicken that up a little bit. And if it does pull down here, then you trigger it into this particular one, and that's all right too. But this is, if we build in at the beginning of the trend, I mean, and this is a corrective pattern here, then we'll be taking out that previous high over here. So we've got a long way to go. So this is the place to do it. Yeah, so futures contracts would be better, so you don't have to pay all that money. Okay, sorry for waffling on so much. So we're over to the base metals, and we're looking at the possibility of iron ore here being wave 1 with an A and a B and a C here. Now it looks like it wants to go up here further, but for counting here, I've got 1 and 2, and then 1 and 2, 3, 4, 5 for the third wave here. So that's the wave 4 of 1 less degree. So I'm thinking that if I give it a bit of space, it's got 1, 2, 3, 4, 5. It could have one more push and then have one more low here. But if it finds support on this 27, so 772, then we'll be going up from that point. And if that's the case, then you can buy Rio, FMG, those sorts of things. But we're not there yet with it. So we don't want this to turn into an impulse wave. What I'm trying to do is consider this being wave 1 up here. And this is the same for Singapore here as well. We've got 1, 2, 3, 4, 5 up here for 1. Not the best looking ABC here, but I need to get an impulse wave here. I don't quite have it yet. So I'm not really ready to call a shot in for buying FMG and so on just yet. Rio, Vale, all of that sort of stuff. So we're not quite there just yet with that. Okay. The other one here is nickel. Now, you always get a bounce off of, not always, but 90% of the time at least, I don't know, it could be more, could be less, but you get a bounce off a big number. You know, what I'm trying to do is trying to figure out, is that going to be bullish or just a bounce? We're going to go further down at that point. So we're nothing to do with nickel at the moment, unless you're in that Aussie stock IGO. So the copper fund here, this is just copper. So we came to the conclusion that the move up here would be wave A, B, and C here. It could be viewed as wave 1 and 2, and 1 here and 2 back over here for that. That's possible, but it's a rather big wave 2 here. When we look at the LME here, it's pretty clear that this is an ABC correction to the upside. So this is the LME here, a bit of a different thing here, but yeah, so we've got that clear A, B, and 1 and 2 and 3 and 4 and 5 here for this, and we've got this here as a corrective pattern. We've got this as an impulse pattern, so it's likely we've got an ABC for the A wave, a B wave, and then 1, 2, 3, 3, 3 something, 4 and 5. So I think we've got that run to the upside here. So that's what we're looking at here with this oil fund, with this copper index fund here, and the futures market with the high grade copper for the US will be much the same as well. So I won't go there at the moment, but we will have a closer look at that tomorrow. The lithium Globex here, it's not really a lithium fund. It's got, as I mentioned, it's got 2 lithium stocks in here. There may be more. These are just the sort of main characters in here, but what we're looking for here is that we want to go long, but at the same time we want to make sure we're on the right track. So we look at the bearish side. If the bearish side is here, and we look at this as an A and a B here, and then 1, 2, 3, 4, 5 for the C wave here, and here we're looking for 1, 2, 3, 4, 5 moving up here. Anything above that top, then we can go long. So after this, it's this 5 waves here is the one that's important to me. this as a 5, 1, 2, 3, 4, 5 is not really that important to me because I've got overlap on 4 and 1 here, so it can be 1 and 2 and 1 and 2 here. But I do want to look at this 5 waves in here, so I'll have a look at it next week, and we'll just figure it out a little bit. But we do want it to pull back, and then we can look to go long in lithium stocks as such. But we're also not ready when we look at if we look at where are we here, this is the big Chinese stocks here. These are 150 billion, where the US ones here, PPL and ACDC and all that, and SQM and ALB, they're about 30 billion or something. So, but anyway, this is not quite finished here yet, this move to the downside. If if it finds support back up on 65, the medium level here, then fine. But otherwise, I'm still looking for this to be 1, 2, and some to finish off. I've only got 3 waves here, so I'm not sure how this could play out as 1 and 2 and 3 and 4 and 5. It could do a few things there, I did notice ACDC here, which is an Australian one, isn't it? Yeah, so that's not much chop. What about another one here, ALB? Oh, I mean, most of the Aussies are cranking it, because they're small enough to be, had for entrees. So yeah, this was the US one here. That was probably one of the better ones. So it's got a bit of an impulse structure up here, and I like it because from here we've got an A and a B and a C wave here. So it is giving us that impulse wave to the upside there. Just thought I'd show one US one, but all of these little Aussie battlers here are pretty much, I don't know, 6, so still a bit lazy. Yeah, he's still down the pub. LTR here was going to sort of stay around the $3. We've talked about that long enough, but it still needs to push up there and do another correction. It's not going anywhere. It's it drank the punch bowl and now it's still recovering. So PLS is pushing up, but it still needs to get above this $5 mark. 5 is the second strongest number. It's going to be here for a while, but it will take out these tops here because this is corrective. So there is further upside for that on the lithium side here. So over to the energy sector, we were looking for from this move here as the A wave, the B wave with the triangle, and then pushing up here further. And yeah, so I've been very conservative with this move to the upside. But first of all, from here we had 1, 2, 3, 4, 5 for 1 and 2, and then 1 and 2, and then I've been very conservative with the third wave in here. I can certainly extend it out and probably will, but 1, 2, 3, 4, 5 for the third wave here, and then we'll have the fourth wave here, and then we'll go up the fifth wave. So we're looking around 7, 8, but probably pulled up to 8 at that point. And like I said, I can easily when I was counting this here, I had 1 and 2, and then the third wave in here, and the fourth and the fifth here. So I really sort of pulled it out where I could put this here, for example, and put this up over here and stretch it out. So I won't go there just yet. I just want to kind of work the most minimalist count possible. But this will be 1 and 2 here, and 3, 4, 5 up here. So there'll be some sort of classic trading levels pattern across number 5. It's a strong number. We haven't added to this position. I didn't want to. I like to play Crude pretty safe because it's just a gnarly little critter. So I'll leave that there for that. And this is the US natural gas fund here. So all I wanted to point out here is that we've got a low in the picture here. We could look at it as some sort of, ABC pattern here, but it counts quite nicely with 5 waves here, 1, 2, 3, 4, 5. So here we've got nice 1, 2, 3, 4, 5 here, and we've just been waiting for this to be an ABC correction here. So you can go in and buy this pretty much, I reckon. This is good to go, but we've been focused on the gas market itself. But anyway, it's just nice and clear, no cost in overnight financing. So we come to natural gas, and there's a couple of ways we can be looking at this. So from the top up here, we can look at it as an A wave, a B wave, and a C wave down here. We could also look at it as 1 and 2 and 3 down to here, and then look at wave 4 here. Now wave 4's are complicated. They can be, you can view them any way that you want. down here. The 38.2% retracement level is here, so it's pretty high. In that case, we could also, we could also just look at all of this down here as an ABC wave here, and then a B wave over here coming up even higher over here. There's a string of events that we could play out to do here. So when I get those sort of situations, I just rather sort of focus on the intraday. And the intraday, the 5 waves up here, right, that we looked at just here with this oil fund here, these 5 waves here, we've just been waiting to see. Normally go long above the B wave here, but we can see we're getting impulse waves here, and it's moved up quite high and all the rest of it. So so that's what we're seeing here. So we've been talking about going long. There's different ways I could play this out here. I could put wave A here, wave B here, 1, 2, 3, 4, 5 up here to finish that off. I could go 1, 2, 1, 2. There's different ways I could look at all of this, but it doesn't really matter. All we're going to do is make money, and we're going to do it because of this 5 waves. Not so much this 5 waves, because we could also put wave 4 here for that as an ABC pattern. But because this is corrective here, this little pattern in here, that gives us the green light. So we're going to go from 50,000 ticks to 100 ticks. And these are the 5 waves here that we've been working, as you know, if you've been following. And then we've been looking at this as an A and a B and a C wave here. But at the same time, we've been looking at it as 1 and 2 and so on. But you can kind of see how sort of lazy that is in a C wave, and it's nice to have a lazy C wave here. And then what we were doing yesterday and the day before is, well, basically you can go long above the B wave, but now we've always tried to look down here to get a better job. Now from this top to this bottom here, this is the 61.8%. Normally you'd take it from up here, but because we've got 3 waves here, it'll be this one here, because this would be 1 and 2, and then 1 and 2 here. Do you know what I mean? So this would be a wave 2 over here for this, and this would be a wave 1 down here. So if it was going to be bearish, you know, so we need to sort of understand that and then remove that from the equation. And if we can do that, then we can be bullish. So we're basically removing the bearish count so we can become bullish. So what I wanted to say here, though, as a wave 2 here, we would look at this as a wave, this 1, 2, 3, 4, 5 up here for wave 1. We can look at that as the A wave. We can look at this as the B wave here and the C wave here, because we've got here now 1, 2, 1, 2, 3, 4, 5. So 3rd wave, 4th wave, and 1, 2. No, that's probably there anyway. See here. So basically, we can now go long above that top there. That's where we've already got a position here. We're a bit cheeky, but just a small one. Yeah, and now that we've said that, there's different ways to look at all of this. So this move here looks like it's in 3 waves, so we can go long above that one. That would be the typical thing to do here. So this one here looks a little bit corrective, but we could use that. We could go on top of that one now. This move up here could be an ABC pattern, and it could come down here further for this. You know, we don't know that yet. This is 272, a bit of a weird number, but one of my favorite numbers. So is that number support yet? It's not, is it? It's trying to get up there, and it could fail and drop down and do all the rest of it. But yeah, we're not there just yet with that, but can be. So the other point here is that this could be 1 and 2 and 1 and 2 here, and then push up through here, but eventually it will come back, and you'll end up with a pattern like this here. Not as big, but then you'll have the B wave over here. So this pulling back in 3 waves. So then you'll have the B wave over there. So really, yeah, it's not support. It's a bit of a classic trading levels pattern there, but it's just not support. And you can see this level here, whatever that is, the 50, the lower end of group 2. So 65, 72, and 80. So you can see at the 65 here, and try to get it here. It took so long to get it here, but we're patient and we waited for it. We got it over here. You know, that's when the penny drops. That's when you it will drop straight into your bank account. Alrighty, thanks for tuning in. Much appreciated. Cheers.